Hey everyone, today I'm going to be making a video about a low risk method for trading that anyone can try. It's actually the first method I used when I started. The first thing you're going to want to do when you start trading is come up with a plan and figure out a way to execute that plan. For me, my goal was to get a 6% return on investment every month. And in order to do that, I really didn't have to make very high risk trades, just low risk trades, make 1 or 2% here and there. And for me, this method worked really good. So, like I said, this video is for beginners, people just getting into trading. And so in order to discuss the plan, I'm going to have to go over some topics, some basic technical analysis. In this video, we'll cover trend lines, we'll cover support and resistance, we'll cover candlestick charting and different time frames that you're going to need to use. We'll also do a little bit on RSI, Relative Strength Index. I'm going to be looking at the chart for ETSI in the month of December. Let's see, what was it? Yeah, December through February of this year, because during that time frame, that chart in particular just really followed this style of charting. Alright, so when you're looking at swing trading, that means you're doing a trade over anywhere from a few days to a few weeks. For me, I typically try to get in and get out of a trade. And the method that I'm going to be discussing here, we're going to be looking at trend lines, and we're going to be buying stocks as they're following an uptrend. We're going to be buying the stocks near the trend line and holding them overnight, hoping that they'll move up away from the trend line. Trend line that we'll be looking at works as support. As you can see in the ETSI chart, this trend line here from December through February, the price level, the price action of the stock stayed above the trend line. So if we were to do an entry near the trend line, we would have a low level of risk, because if that price fell significantly below the trend line, we could just cut our losses and get out of the trade. However, if the price bounced up off that trend line, we could go up 5 or 10%, and that's where you would be selling and securing your profits. A trend line is any line that the price of a stock follows, and it's usually considered a strong trend line if that price has been that trend line has been touched 3 times. See in the ETSI chart that we hit this one trend line about 3 or 4 times. So I consider that a strong trend line. And you can just put your entry price anywhere on that trend line. You're usually looking for a day that's showing some sort of strength. I typically look for a hammer that closes above the trend line. That means that the stock was sold off below the trend line throughout the day, but then the buyers picked up that price, the buying pressure pushed that stock price up, and it closed above the trend line. Whenever I'm doing a swing trade, I always look for a hammer or a confirmation of an uptrend. Also, it should be noted, you're always wanting to trade stocks in an uptrend, especially if you're just doing simple swing trading. Some other topics that we need to cover is support and resistance. And support and resistance are very simple. Support is a price where a lot of buyers are going to be stepping in, such as a trend line or a specific price level. And resistance is a price point where a lot of sellers are going to be stepping in and taking their profits. Another thing to look at is the time frame. When I'm doing swing trading, I typically look at a 1-day chart, 4-hour chart, or a 1-hour chart. I'm sort of a short-term trader. So when you look at different time frames, you're going to have different levels for your different technical indicators. We can go over that in other videos, but just know that all of your technical indicators, such as relative strength index, moving averages, MACD, those are all dependent on the time frame that you're looking at. And for the sake of simplicity of this video, we're just going to be looking at the 1-day time frame. Okay, so now that we've gone over some of the basics, we're going to run through a hypothetical scenario with this stock. Suppose that you have $1,000 in your account and your goal is a 6% profit per month. It's going to put you at $60 a month or $15 a week. So we can look at this trade and pretend like we have $1,000 in our account, how would we handle it? So if it were me, I would set my buy point here at 49.50. I'd set my stop loss around 49 or 48.50. That would give me a risk of $10 on the trade. And then once you go into a trade, you always want to have a plan for the trade. So our target, we're going to look for some resistance. If you look at the chart, there was a previous price a little bit above here where we closed at 52.50, so that would be my price target. So it's also willing to mention, we can look at our RSI. When we entered into the trade, our RSI was at 58. And remember, RSI is just an indicator that tells us the strength of a stock. Once an RSI gets up to 70, 75, 80, that's usually in the overbought territory. Basically, it just means that this stock is a little bit overvalued at this time. It has some momentum, and it's just an indicator warning us that this stock has a lot of momentum and it may be running out soon. So you can look at this trade and you can see that our risk is $10 on the trade if we were to buy 10 shares at, for simplicity, $50 a share. Our price target's $52.50, giving us our target profit $25, and our stop loss is set $1 below our entry, giving us a risk of $10. So it should be noted that the risk here really is more than $10. Just because you set a stop loss doesn't necessarily mean the stock's going to sell at that stop loss. For example, if Etsy put out a press release at midnight and said that they're going bankrupt, or they're having some sort of issue, or the CEO resigns, there's a good chance that that stock's going to open significantly below where your stop loss was set. So whenever you're swing trading, always keep that in mind. And also, it's an important thing to know, you don't want to hold these stocks over the weekend if possible. Whenever I'm swing trading, especially if I'm trying to keep my risk low and secure profits quickly, I never hold anything over the weekend. So that's my video. I hope you guys enjoyed it. I hope you learned something. And if you could, please subscribe and give me a thumbs up. Thanks.